Good morning, ladies and gentlemen, and welcome to this live trading webinar. I hope everyone is having a great day so far, wherever you are watching us from any country in the world. So this is the disclaimer, just to make sure that everyone understands that this content is for general information only, and it's not intended to provide trading or investment advice or personal recommendation. For those who are new here and watching us for first time, please make sure you engage your trading with a weekly fundamental podcast. Every Monday, I record and upload on our website what's happening, what we expect it to happen in terms of the fundamental part of the markets, and somehow we can combine them with existing market condition and just build some trading methodology around them, let's say. So it's a great tool, and definitely if you haven't downloaded the Admirals mobile yet, please make sure you do so, because it's much easier to manage your account from there. Let's have a look at the premium analytic portal. Finally, it works today on my browser. And today's top headlines: we have China's inflation accelerates as economic rebound anticipated. Russia claims success in Ukraine's soldier at Moscow names new war commander. Air Force KLM notifies frequent flyers of data breach. Trafigura sells stake in Russia-backed oil refinery in India. Amazon appeal to Union victory in New York rejected. PC shipments drop sharply in a slump expected to last until 2024. And the last one is from Alphabet. Alphabet unit very little trim, more than 200 jobs. That's not very nice to hear this type of news. Let's go to the calendar and see what's on for today. If you had the chance yesterday to watch the market in 30 seconds, you should have an idea of what we expected tomorrow, and that's the inflation rate in the US. Early this morning, we had the trade balance in Australia came stronger than previously, and also stronger than the forecast. That can give a boost to the Australian dollar. And China's inflation rate remained as forecast, 1.8. Again, some more strength in the Chinese yuan. Now, if today, a possible scenario is that if today in the US we will see a lower inflation rate, we said many times, for consumer, it's very good, but for currencies is not ideally, because it loses its strength. And we can see some more weakness on the dollar. So let's jump onto the charts and see from a technical analysis, what do we expect it. Some interesting stuff, guys. Here I will start with the Japanese yen currency pairs. We can see that here the Australian yen, although it has a great fundamental side, the Australian dollar, however, yesterday we marked this area of resistance. So if you bring the strategies I shared with you, this is a trending market. We understand that this is a trending market from a series of lower lows and lower highs. And we said that in the trending market, we start first, do I have a trend line support or resistance? In this case, I do have a valid trend line, and it can act as resistance here. Second, do I have a horizontal area of resistance? Yes, I do have. That's the last swings low. And third, do I have a fib retracement? Let's check the fib retracement. We drove from the high to the low. We haven't reached the 78.6, and we are around the 61.8. So we do have a fib retracement. And then we can either wait for price action confirmation, or we can just put sell limit orders right here or there, wherever you want, with a protective stop a bit higher on the scale, so we don't get caught. We protect as much as possible ourselves by any false breakout can happen during the session. So that was maybe that will be played out quite well. So we'll see what's going to happen. Also, from a candlestick pattern perspective, here we had an inside candle after a rejection here around the 50 and the 200 moving average. Very, very strong area of resistance when they come together. An inside candle here, then another candle still inside within this range here. So on the lower time frame, it was just ranging. And if we're going to break and close below this area, and then we're going to take the 20 moving average, we are all the way for a nice sell-off, at least to target this area. And as you can see, you have more than 3-1 to play around with this. Or if you're taking 2-1 on a trade, that's totally fine. The euro, the Swiss yen, the Swiss appear really, really weak. So just bear with me to insert the CHF JPY. Here it's the CHF JPY pair. And yesterday, again, we had the same scenario. I'll zoom in a bit. We do have these lower highs and lower lows. And the price just retraced back to the 20 moving average. Previously at this area, it sold off. Now we do expect to behave with the same pattern, the same behavior. And if we take our support is here, so we have this, the resistance area is here, as you can guys see. Then if we draw the fib is not that strong, it falls break the 78.6 and not the 61.8. But regardless, it's in this area, and we saw this price action just stays within these boundaries. It means market, it's not that strong. Anyhow, the validation comes because of this downtrend. We are in a downtrend. It's not an uptrend. It's not a sideways. We have a successive lower highs and lower lows. So we can wait for some pullback and rejection around the major level. So the rejection came at 78.6%, or even after this inside candle. Why the sound fade? And guys, check my microphone. No, microphone works well. Is it better now, guys? Some people, they said that the sound fades sometimes. If not right now, then maybe your connection, it has a, we'll see. Thanks, sounds is very good. Sounds good for me. Okay. Johan, please check also your connection. Maybe it's something with your internet. And what about Cherry asked, what about the 200 moving average on the CHF JPY? That's a great question. Now, what did we see? Guys, sometimes it's very good to observe the recent price behavior around a major level or an indicator. So what do we see here? That recently when the price touches on the 200 moving average, it went just through without any problem. And then when it touches again with this green candle, again, it went just through. It didn't respect how we call it is that the price didn't respect the 200 moving average at this time. So most likely we can expect it that the next time it's going to retest the 200 moving average in the very, very near future, we do expect that it's not going to be the major obstacle. And that's applying not to only 200 moving average, to any moving average or any indicator or oscillator you may plot on your charts, all right? So at this point here, I wouldn't put so much attention, to be honest, on the 200 moving average, because the price recently showed me that it didn't respected it. So maybe now it's going to just continue to the downside. And yesterday, let me find it. Yesterday, just before the New York session, we had, it was Euro CHF. Yes, here we had a clear break. If you guys want, I will just use the same area. Now, I will teach you something about the Bollinger Bands. Bollinger Bands, they behave great on this volatility, contraction and expansions. Now, we do see that here we are consolidating, and the bands, they are just flattening in a parallel to each other. Okay. Now, when the price, it will expand in a strong impulse candle, in a strong volume candle, and we see the opposite band declining if we are in an uptrend, like this one here, the price broke and closed above the upper band, and the opposite band, it turned downwards. It means it's a strong indication that this market can start trending higher and higher, because that's a good volatility expansion. There are many occasions that, let me find something here, maybe we will be lucky and we will find it. Occasions like this one here, let's say, when the price here, you see, guys, the price broke below the band, can close below the band, but the upper band didn't turn upwards. It just continued decline. You can see it here. It means it's not a strong breakout, this one. All right, same with this one here. We close. Okay, that's not the best example. Okay, I don't find something. This one here. Here it is one more. So the band, the price broke and closed above the upper band, but the lower band turned upwards instead of downwards to the opposite direction. This means that it's a very weak breakout. Okay. Bollinger Bands are a great tool in general, because they give us not only about trending markets, because it's a trending fielder, and give us indications about trending market, but also when we have breakouts, if we don't see this, and this is a great example, and guys, remember it, this one here, if we don't see the bands moving in opposite directions with a strong decline in terms of an uptrending breakout, then if we don't see this happening, it means it's a weak breakout, and we don't expect to see continuation. All right, but if we see this example here, we do expect that it's a valid breakout. Then stock traders, when they are using the Bollinger Bands, they tend to buy right when the price is closing outside of the bands. And if it close to the upside, they buy. If it close to the downside, they sell. But on the currency pairs, based on my back testing, I didn't found this strategy to work with high probability ratio success. All right, so with news of should about 100%. Todd, I'm looking to Hela with news of India contract yesterday. Should 100% to 0.1617. All right, that's great. The gold still pushing upwards. We can see that it's still pushing upwards. And guys, you see the price here again, it closes above the bands with a very minor decline here. It's not a strong breakout, so we do expect some different than upward behavior. Now, it doesn't mean we're going to start trading against the trend and trying to catch trades on the downside. All right, so please be careful there. Now, let's have a look at the daily chart on the pound against the dollar. Yesterday, we were still sitting above this area. Now, guys, when there are very major news waiting in the markets, like the one today, the inflationary news, markets usually, they just tend to go sideways because they don't want to leave the prices higher in case of bearishness on the US dollar. So the price we do expect on the pound US dollar to explode, and they just want to keep and take as much better price as possible, the big trading firms. We see that we have this this symmetrical triangle pattern. On the lower time frames, it's very obvious. Now, we do expect, in my opinion, I do expect a nice breakout from this point onwards and target these areas here. But we will see what's going to happen. Maybe the price is going to false break and then it's going to continue. Of course, we will be patient. Now, the euro, it's still hovering around this area at the top. So today, technically, we don't look to buy the euro on the daily chart because it's already in an upwards movement. The CHF performed really, really weak in general, and more or less we can expect all the CHF pairs to work against the Swiss franc today. So that can be a really good opportunity to look for some trades against the Swiss franc. So we buy the Euro Swiss maybe, and we buy the Pound Swiss, and we buy the USD Swiss, and so on. Or we sell the Swiss against the Japanese yen. And as we looked just when we started, the JPY, the CHF JPY looks to be a good candidate to keep an eye on and maybe find some intraday opportunities for day traders. This one here. So if we go down to the 1 hour chart, we can see that for this session, we do have this push to the upside. So I will wait for some retracement. Here on the 15-minute chart, we do have some sort of reference. So guys, if you are around, if you are trading around London session and you want to keep an eye on this 15-minute chart, that's the USD CHF. If I draw the fib from here to there, so we have 50%, 61.8% retracements. They looks quite interesting. So we can pay some attention here in case the price is going to continue rejecting the Swiss franc, so we can find some bullishness there. Some traders, I think yesterday they asked me about the pound Australia dollar. I think so. Let's have a look on the weekly chart here. I don't see anything pretty much on the daily. We are at this area of support, so we have to be mindful at this area of support, guys. Maybe the price, it's gonna just push to the upside. Anyhow, we didn't see sellers coming in, and this consolidation here at support sometimes indicates a good buying opportunities. Crude oil, again, I don't have any bias. I'm waiting to see either price to push to the upside or to the downside before I start trading it. Euro against the Canadian dollar. Canadian dollar also performs with some weakness. Again, the euro against the CHF. If we go down to the lower time frames, we can find some sort of retracements, and we can take some buying positions. You see, guys, here, that's the 1 hour chart, the Bollinger Bands. We had this nice break and close above the band, and you see at this point here, the lower band turn downwards. The upper band, of course, it's going to turn upwards because we have the break. And then how traders, they do it, they start buying right here. And again, I don't do that. They buy here, and once the price closes inside the band, the first time price closes inside the band, they just kill the trade. So they made this profit here. Now, why I don't do that in trading, in Forex trading, it's simply because, and in general in CFD trading, to be honest, either it's stocks or Forex, because I don't know where I'm going to put my stop loss in terms of reward to risk. Like if I buy here, then my stop loss should be placed ideally somewhere there. So by the time the market give this room, in this occasion, I didn't even make 1-to-1. So what's the reason to risk and get into this trade? Very low probability trade for most of the traders. All right. Question, I will take CHF on the 4 hour chart after retrace, Aussie CHF. Let's have a look. Yep, looks very decent. Australian dollar against the Swiss franc. On the 4 hour chart, we have this very nice trend line. Well done, rumors, spot on. So we can wait for price to retrace. Let's check our strategy to see if we can get some trades based on our rules. What do we have? Price, it's making higher highs and higher lows, an uptrending market. So it's valid. Then we do have a trend line support that is below the current price. So we can use it as buy. Let's say we are above this trend line. We are, for moving average traders, we have the 20 moving average, the 50, or even if you have the 9 moving average, guys, it's still above the, it's still below the price, and it's still in a line with the 20 moving average. So it's totally fine. Moving averages, they just show us if the price, if the market is trending or not. So let's just keep it simple, and let's say that market is trending. So we have our horizontal, maybe the price is going to stop here, but ideally I want to get some deep retracement somewhere there. If I use the FIB tool retracement, if we use the FIB tool retracement, we do have the 50% or 61.8%. It's going to match nicely on the trend line. So that's totally fine. We can either wait for some price action to enter, or we can just put some buy limit orders to get filled with this move. Guys, I will tell you something else about market behavior, price action behavior. Look at this. This market here retraced up to this level when it came here. Then it created a higher high, but it didn't respect it the last swing. It respected only the trend line. So we had these deep retracements. There are shallow retracements like this one here, and there are deep retracements. Both of them are trending markets, okay? This is deep retracement. So we do expect what? Maybe a deep retracement. All right. So we don't get scared if the price is going to come here, let's say, and we're going to see it keep moving and decline on the and reject it, sorry, on this trend line. All right. the behavior, the recent behavior of each market reveals what can we expect it in the near future. So understand this. It's the same concept with the moving averages. If the price is not respecting a moving average at that particular moment, we do expect it that when it's going to revisit the average to behave similarly. And same with this situation here. And the last one, let's have a look at the dollar index. The dollar index, it's still at this area of support. Here we are. Now, as I said in previous webinars, in my opinion, this one here is just moving. It's just moving towards the downside. However, maybe something changed definitely, and it will take the market back to the upside. So it's just moving sideways for now. That's why maybe we don't just focus too much unless we see the breakout. We have 1 more minute for the last request, and that's the end gas. And gas, we are here. That's the weekly chart. Yesterday, we said the price maybe can find some support around this area of support. And we are right here on this area of support, guys. So we can wait and see if we're going to have a new higher high, higher low, or a failure swing like this one here. If we're going to have a higher high, we can trade and target this area here. But for now, definitely we stop selling. All right. So, ladies and gentlemen, Darius, if you have any problem about the way I do trading here, allow me to tell you that I'm trading for more than a decade and successfully with trading funds and all this stuff. So please come to the Telegram account and just ask kindly the questions you want to ask, and I'm more than happy to answer them and to provide any guidance if you want in your trading. In the meantime, I would like to wish to everyone to have a great time. Happy trading for the rest of the day, and I look forward to see you tomorrow at the same time. Thank you so much.